Welcome back, y'all. My name is Nigel Schroeter, and please make sure that you like, subscribe, and hit that share button if you would like more content like this. And don't forget to comment, ask questions, and be active down there on those comments so that I can get back to you with information and we can spread the knowledge to more and more people. So today, what I'm actually going to be talking about is my Jewelers Club. I did a video months back talking about why you should not get them, as well as some alternatives for my Jewelers Club. Being that I learned a lot more about the company, and the company was going through a situation where they were no longer able to report these accounts to the credit bureaus. Now, I recently was having a conversation with someone about credit. And when I was having the conversation with this person, I immediately became aware that they were knowledgeable of credit in general, but not on specific topics like this. So I wanted to make this video for those people, especially people who started your credit journey maybe, 2-3 years ago, when my Jewelers Club was an active option for you to start your credit out, as well as some of those other companies, the New Coast Directs and things like that, and kind of explain what happened with those, with this particular company, my Jewelers Club, as well as give you guys some pointers. So, one thing that I learned with building credit is when you're building credit, you don't want to use a lot of consumer finance products. And so my Jewelers Club is one of those consumer finance products. There's a lot of other ones. Basically, when you build credit, you want to kind of make sure that you're focusing on building your credit through banks and through financial institutions that are actually established. So you're not getting red flags for just having these random consumer accounts on your credit. So that was one of the first things that my Jewelers Club did that was kind of contradicting. Yes, they gave you a $5,000 trade line. Yes, it was only $100 annual fee. Yes, they would accept basically anybody who applied. So was it a good option? Yes, for a lot of people. However, on the other hand, remember that the products were extremely upcharged, so they weren't too much worth ordering, um, which happens with a lot of companies, as far as building your credit if you're going through these different consumer finance and third party companies rather than going to a actual financial institution. Just as well as they weren't reporting at a certain point in time because, of course, the credit bureaus are going to catch on to things like this. Now, where does the problem come in? The problem comes in with people are still giving the information of, hey, go to my Jewelers Club. Hey, go to this company, go to that company. Well, right now, my Jewelers Club is currently not even accepting applications. So if you actually go to their website, you're going to see on their website, my Jewelers Club is not accepting new credit applications at this time. To view your active current account or make purchases, please log in to my Jewelers Club at, and then they give you their link and says there you can review your statement or contract and make a payment or change shipping information. We do apologize for any inconveniences. All right. So right now, if you are telling people to join my Jewelers Club, you're giving them dated, older information. So I want anybody who's watching this channel to be giving people the best information that's out there and the most current information. So please make sure that you're telling them, hey, go get a secured card or a secured loan. Kickoff is still available. Grain is still out there. There's still other products out there that they can use to build, but please make sure that you have the knowledge on this on as well, even with Kickoff and Grain and Grow Credit or Rent Reporters and all these other programs, that some of these programs are looked at as subprime programs and they're reporting on your credit report. So when banks look at that, they can see that you're using these subprime companies to build your credit rather than to just go ahead and go to a bank and put down a $200 security deposit or potentially get a card with a lower security deposit. Capital One even has a $50 secured card option, and use one of those options to build your credit, um, rather than to go and put yourself in a situation where you're not going to be able to get what you need, and you're going to be sitting there waiting, wasting more and more time. Um, and the money is going to be gone with a secured card. Most secured cards now are unsecuring, which is allowing you to have your card graduate and give you those funds back. So, as always, thank you guys for watching. Thank you guys for tuning in, and we'll see you all in the next one.